Hello.
Hello, everyone.
We will have a session, right?
Yeah, we're gonna have it surely. We just wait for a couple of minutes for others to join,
Okay.
and we'll start.
Здравствуйте.
Здравствуйте.
Hello, Professor.
Hello, everyone. Hello, everyone again. So I decided to let you to write the makeup as the results were really disappointing. I didn't expect that you're gonna write in this way, and the issue is that most of you did not submit the Excel file. So I decided to give you the makeup, and the makeup will be not multiple choice based, but it will be more calculation based. So you'll be given a question, you have to solve it and submit the questions. It will be on the 6th of May. So
May I ask you one question?
yes,
Oh, sorry.
please.
How many questions will we have in that kind of
Most
exam?
probably you will be given 4 questions to solve it.
Like 4 similar
Yeah, the similar
questions like
that
this.
you have the multiple choice questions, all the end of the chapter questions.
Okay.
Okay.
I got it. Thank you.
By giving the makeup, it doesn't mean that I'm going to complicate your life, okay? I'm making your life as much possible as easier.
Also, I have one question.
Yes,
Can I
please.
ask?
Yes, sure, of course.
Thank you. This makeup exam will be counted also out of 25 or not?
Yes, this makeup, it will be for you like you're entering from the beginning.
Mm-hmm.
Like it's not out of 10 or 20. It's just it's not an additional point. It's just retake the exam.
Oh, thank you very much for this.
Thank you very much, sir.
Yeah.
So imagine you did not enter to the exam. Now you're entering from the beginning.
Mm-hmm.
Okay. I hope you will manage it good, and you have a good time to do it.
Yeah, thank you for this capability, Professor.
Thank you, sir.
No problem. You will thank me when you get a good result. This will be really thank for me. The words actually, I don't count them, but I count only the grades that you get it. Because I put effort and I want to get the results.
Сколько у нас будет времени на вот эти 4 вопроса?
For 4 questions, you have more than enough time. More than enough. Like we'll have 1 hour. Maybe I'll give you whole 1 hour to solve it.
Mm-hmm.
So we are given here the question. Let's say one question, dividend discount model. I mean, most of you maybe had it, this question. Here you're asked to calculate cost of equity. So you are given the dividend paid, you are given payout ratio, net income, market value of equity, in addition to retained earnings. So basically, we need to find cost of equity here. It's just straightforward. We are according to the formula that we are using it in the slide. I will not refer it to it, but it's basically dividend, as you can see, F12 divided by C14, which is price, and F12 is the dividend, and plus the growth. So we are rearranging the formula to find the cost of equity. That's it. But the key point was here, it was a current dividend. So we need to, the current dividend is given. We need to find D1, which is D1 multiply 1 plus G. By the way, I will upload this file to the Moodle as well. Don't worry. So if you want to see it, you can get it as well. And in this way, we get this cost of equity. Then we move to the second question. It's the same thing, but the difference is that next year, okay, which means D1 is given to you, you just directly substitute. They are not the same questions, because I received some concerns in the exam that, professor, you asked the exactly same two questions. I said it's not possible, because there's always one key word is changing the question totally. So here, as you can see, D1 is given. We don't need to calculate. So rest is calculated. We just estimate and we calculate it here.
Sorry, how did we find the growth rate?
The growth rate, there's a formula that we're using. It's 1 minus payout ratio multiplied return on equity. It's given in the slides. Let me open it once you ask this question again. It's just straightforward formula. Even you don't have to refer, it's from the Principle of Finance course. We solved it many times. Here, 1 minus payout ratio. It's in the book, it's written clearly, but this is payout ratio and this is return on equity. You get the growth here. And this is how we find the cost of equity. And same thing we are given here, like here the key point is the third year. So you need to convert to the D1, which means you need to divide, not multiplication. And the same thing way we find the cost of equity. Okay. So here D3 is given, we need to make it D1. In previous was D1 given directly, in the first question was D0 given. So the main point was to convert to the D1. Now in here we're finding the coupon rate, okay? All the variables are given. We find the coupon rate. First of all, we find the coupon payment. It's like normal bond value estimation. I mean, you don't have to even kill yourself. You find the coupon payment. Same thing here, but with the different conditions. Something paid annually, the other one is paid semi-annually, and so on. One is 800, this is 900, the differences. Just straightforward calculations. And here, you're asked to calculate the weighted average cost of capital. Like everything is given. You need to estimate the proportion debt and proportion equity. And you're not given the relevant dividend. So you have to use the dividend discount model to find cost of equity. Like dividend growth, stock price, and the D1. That's it. It is the same thing that we use here. Yes, Evgenia, please.
Professor, in this question, in this task, I have just one question.
Yes, please.
The growth rate is not given.
Yes, you need to find it.
How can we find it? Can you show, please?
Wait, why it's not given growth rate? This question was not given the growth rate?
Yes.
Wait a second. ROE was not given as well, yes? Here.
Mm-hmm.
Okay, just a second. If the growth rate was not given, but it's supposed to be given. It's supposed to be. Then it was then my mistake that I didn't provide you. Okay, it was my mistake. Let me just check it out again, just to be sure about it.
But if I calculate using straightforward method, not dividend discount model, I get the right answer.
You got the right answer.
But I didn't use dividend discount model for that.
If at least in here you should have used the dividend discount model at least. Otherwise, did you get the right answer?
Yes, but I just took return on equity as it given in the text.
Anyway, if you're asked such a question, then you can follow it and you can get your full mark. But in the multiple choice, it might lead you to the wrong answer as well, unfortunately. And it was my mistake. I accepted this question might not be considered if you didn't get it, the question right. But in the exam, what I'm planning to make it as open-ended questions, you'll provide all the solutions. So I'll consider your solution the way you calculate everything.
Professor, I also have a question.
Yes, sure. Go ahead, please.
It's a question about, just a second, sorry. .com. Face value, cost of debt, 5-year maturity.
We'll come to that question. Wait a second. Wait, we'll come. Don't worry.
No, I think we've
No, we've passed it.
Here, this one.
Yes.
Yeah.
At the exam, PV was 900.
This one. Yes.
Yes.
But it's here 890, yes? Showing.
Yes.
So you didn't get the right answer, you mean?
Yes, I have the A. My answer was 5.495.
But did you supply, if you submitted your file, like Excel file, I would just end up with the Excel file. There was no problem. Anyway, I just canceled this exam. I mean, it's still my mistake. So that was the main reason why did I ask you to submit your Excel file. In case if you make mistake and you didn't select the right answer, I would still consider your solution. That was the main reason. And I actually decided not to give you, to just cancel this exam and to let you to write again from the beginning, to just to get a really good grade about it.
But if I have 900, if the right answer is A, so I'll get like another result.
Yeah, this is what I'm telling you. If if like by mistake, if your result's another one and you select the wrong answer and the system will tell you that you select the incorrect answer, I will not give you for this 0. I would check, and this definitely would raise this issue. I would check it, what do you call it, your Excel file. I would have checked it if I went through this. That was the main reason.
Sorry, Professor. I mean, I selected right answer, but your answer is not correct.
Okay, it's no problem. I know. I accept that my answer is not correct.
Oh, okay.
I'm
sorry,
telling you,
sorry.
your selection will not be counted. I mean, according to the multiple choice as well. So if there is a mistake that is of mine, like instead of 890, I should have put it like 890 here, but I put it, I don't know why 900. Maybe it just was by error typing something. Anyway.
Sorry. Okay, don't want to bother you.
No, go ahead. Go ahead. If you have any question, please. I'm really pleased to discuss the question. That make me happy that you really understand the questions. When somebody's finding me the mistake, it doesn't put me down, actually. It makes me to feel more comfortable because you are really following the case. You are following the questions. I'm really happy for it, that you really understand you're finding the mistakes. It's not a big deal. I mean, I'm like got used to it. Like if somebody might have finding the mistakes, it doesn't put you down. It even just makes you more happy because the student is following you. I don't like really quiet students. I like somebody when trying to find something and trying to get the right thing out. Just don't be ashamed, don't be hesitated. If you think that it's not correct, go ahead, because I'm a human being. I might be mistaken. Even though I know the subject well, I might be mistaken due to some error typing or something else. So your right is to discuss and get your things done correctly. Okay, do you have any questions apart from this? Okay, and we were here, the VAC estimation. This question is similar to this, but with some differentiation. And we've got here again WACC estimation, but to gather the following bond value through the YTM and through the dividend discount model, return on equity is given here. So in this ratio, we're estimating the WACC as well. It's just pretty simple. This-
Professor,
yes.
could you please explain this question in details, because I cannot understand why do we need bond value here?
Why you need to bond value? Because in order to find the cost of debt, you need to know it's through the YTM, okay? You need to estimate through the YTM.
But we don't know future and present value, we just have bond value.
The bond value is it is the present value.
But what about future value?
Do you need it?
Yes, in order to estimate YTM.
Are you sure that you need the YTM in here? It's another question. I didn't read the question, but I said just raise this issue. But are you sure that you need the YTM to estimate here? First of all, to estimate the WACC, what do you need it?
Cost of debt.
Is
Cost
it
of
given?
equity. Yes.
So do you need YTM in here?
No.
No. Okay, good. The cost of debt is given. So why we are using the bond value? Bond is what? Bond, what does the bond represent here?
Debt.
It risk.
No, not risk,
Can
not
give
risk. We have debt or equity?
debt.
Debt.
Debt. What represents the equity? We have number of shares and the price of the shares. So the market capitalization will represent the value of equity. So the market value of debt is 10,000, which is the bond value, and market value of equity is the price multiplied by number of the shares. Okay? Does it make sense?
Yes.
Why do we need to estimate the bond value in here?
In order to take it as a debt.
And then why we need to take it as a debt?
Because we need debt weight and cost of the debt for
Yeah, we
calculating.
need the proportion of debt and proportion of equity, basically. Honestly speaking, you might not use it because proportion of equity was given. You can find it proportion of equity here. But if the proportion of debt directly is given here, then that makes the things more easier as well. So we estimate the WACC, and this question is similar to what you call it to, we solved it in the book. So I don't have to go again through this question. And we are coming to another question, question 16. It's related to break-even point and operating break-even point. It's direct measures. All the numbers are given, but you need to measure it. But it asks you, please find, for example, where are the operating break-even and the break-even points respectively. So it's C. You just estimate and you find it. Same thing here, break-even and operating break-even. We are just substituting the numbers into the formula and we get computed all the values. Do you have any questions, guys, before I move?
Could you please show formula of break-even point?
Sorry?
Formula of break-even
You're asking me
point.
what is the formula?
Yes, I know what's formula, but how you calculate it?
I
know
calculate
that
according to the
break-even
formula.
point is fixed income divided by variable cost minus sell price. Yes.
So first of all, I calculate the quantity, then the sales revenue, and calculate this. And then I multiply it. This is the example is given from the book, end of the chapter. I just copy it and change the numbers and just provide it in this. And measure of the leverage, let me just show it to you. Here's the formula that you're using. It's a degree of financial leverage, sorry. It's down here. Here, break even and operating break even. It's in units, but if you want to convert into the sales, then you have to multiply by the price itself in order to get into the sales. So the price per unit is given here, sales per unit, and we multiply by it and we get the break-even sales. And then we multiply, in order to get the operating break-even, we multiply by the sales price per unit. And this, the question is same, but with a different numbers. But in here, you're asked to calculate units. So exactly same from the book. It's have been taken from the book. I will upload this onto Moodle. You can just go directly through each question. Still, if you have any question before 6th of May, we can discuss it. You can write me. So we have 1 week from now, even more than 1 week, like 8 days. Okay, but before I move to another sheet, do you have any questions? These last 2 questions are coming from the book and they're straightforward questions.
Can you explain the question number 15, please, one more time?
Yeah, sure.
Because I had this kind of problem and I didn't solve it.
Okay. Now we are given, let's say, the data, okay? Market capitalization, net debts, levered betas, and debt equity ratios, and so on. Now, what we need to do, first of all, we put all the levered betas here. And we need, in order to estimate better equity, because our company is not publicly traded, okay? The Bayern Chemical is not publicly traded.
Mm-hmm.
And in order to estimate the cost of equity, we need to know what is the beta equity of that company, okay? Beta equity we're estimating. In order to do that, there is a formula that we need to use, the beta asset, okay? We are using the beta asset. So first of all, we need to unlever it, okay? They are levered, we need to unlever it, okay? Find the beta asset for each. And then we are taking, let me just show you the formula so you can get direct guided well. It was cost of capital. Here we go. Here. Our aim is to find better equity for company which is not publicly traded. If the company which is not publicly traded, we need to estimate a better asset. If the better asset is not given, you need to estimate using whatever the data is given for publicly traded. So better asset will be estimated for publicly traded companies, because for publicly traded companies, the better equities are given, which are better levered betas. Okay.
Yeah, okay, I got it.
Sorry, these are levered betas. Then you're finding for each company, comparable companies, the better asset, and you take the average, and this average will represent the better asset. This better asset will be represented. So we'll put it in here. We have the debt equity ratio and tax we're given. We can find the better equity. So better equity is estimated here. All the information given. Then proportion debt you estimate, proportion equity you estimate as well. And then we can just substitute everything into the formula and we can estimate the WACC. But some of you might face the question here, like you will be given directly this beta asset. You don't have to calculate. You need to just take the average. Beta asset is called as unlevered beta. Okay? Just take it as a notion. Maybe somebody already got it, the questions. Yes, Evgeny.
Professor, in the book, this question is solved like they take simple average of levered betas.
Yes,
and
because
from the table, I mean.
wait, I will show you that. That's what I'm telling you. That's what I would tell. That's like there are two ways to solve it. I mean, when the beta is given as unlevered, then you don't have to calculate beta asset. You just take the average of it.
But as I remember, they don't calculate beta asset. They straightly they.
No. I'll just show it to you why it's not. It's not. I'll show it to you again. Here. Beta is given here. They take the average. Yes.
Yes.
They take the average of the beta equity. This is beta equity given. Okay. This is unlevered betas. But here they are unlevering the beta for each company. This is where